welcome to the deep dive. It feels like there's just this constant flood of news in finance and crypto, right? Kind of overwhelming sometimes.
It really is. Hard to keep track.
Exactly. So today, we're cutting through that noise. We've looked at a Cointelegraph article and pulled out 3 big things we think you really need to know about.
Yeah, 3 key developments.
First, a change in the U.S. credit rating. Then, pretty ambitious Bitcoin price prediction.
Very ambitious.
And finally, there's this sort of debate heating up between a crypto platform and U.S. lawmakers.
Right. So the idea here is to give you a clear picture of what's happening and, importantly, why it might matter to you.
Think of it as your focused briefing. We're not just reading headlines. We're trying to connect the dots.
Let's dive in.
Okay, first up, Moody's. They've downgraded the U.S. government's credit rating. Now, I know credit ratings might sound a bit dry, but this is potentially a big deal.
It could be, yeah. So on May 16th, Moody's, they're one of the big agencies rating, they lowered the U.S. government's rating. It went from Akela, which is the absolute top, down 1 notch to AA1.
Okay, AA1. Still good, but not perfect anymore.
Exactly. It's not a catastrophe, but it's definitely a signal, something to pay attention to.
So why now? What were the reasons they gave?
Well, the main things are worries about government deficits getting bigger and the national debt just continuing to climb.
That debt number is huge, isn't it?
It is. The article mentions it's over $36 trillion, according to the U.S. debt clock. That thing's ticking up constantly.
Wow.
And Moody's basically said they expect these bigger deficits to stick around for the next decade or so.
And what's driving those deficits, in their view?
Mainly rising costs for things like Social Security and Medicare entitlement spending. Plus, they don't see government income, tax revenues really keeping pace. It's projected to be kind of flat.
Okay, so costs up, income steady, not a great combo.
Not ideal for the long term, no. The worry is that these ongoing deficits just pile up more debt. And crucially, that means higher interest payments on that debt.
Right. So it becomes a bit of a cycle.
It can, yeah. They're looking ahead, not just at today.
And they think the U.S. situation might worsen compared to other countries.
That's part of it. They think the U.S. fiscal performance, how it manages its money, is likely to weaken compared to its own past, and also compared to other countries that still have that top-tier rating. It's really about the trajectory. Are we heading in the right direction compared to peers? This downgrade suggests maybe not, or at least raises a question mark. It could affect how investors see U.S. debt compared to, say, German or Canadian debt.
Okay, this is where it gets practical. What does a downgrade like this actually mean for the economy, for, regular people?
Well, it can have knock-on effects. It signals slightly higher risk for lending to the U.S. government. That could mean the government has to pay slightly higher interest rates on its bonds to attract investors.
And if the government pays more,
then that can ripple through the whole system. It might push up borrowing costs for businesses wanting to invest, maybe even for individuals taking out mortgages or car loans. It's not always a direct, immediate link, but it can influence things.
And it just generally raises questions about the country's long-term financial health, I guess.
Exactly. It's a signal about fiscal stability.
Okay. Bit sobering. Let's shift gears. Let's talk Bitcoin. Scott Melker's price prediction.
Right. Scott Melker, he's a pretty well-known crypto analyst, has the podcast The Wolf of All Streets. And yeah, he's made a very bold call.
Which is?
He thinks Bitcoin could reach $250,000.
Whoa, $250,000.
By when?
By the end of 2025. So roughly, year and a half or so.
Okay, that's a massive increase from where we are now. What's his reasoning? What makes him so optimistic?
He points to a few things. Number one is growing institutional interest. More big players like investment funds getting into Bitcoin.
We hear that a lot, institutional interest. But what does that really mean in practice? Is it happening fast enough for that kind of price target? That's a fair question. It's still evolving. Melker sees it as a key driver. He also talks about Bitcoin's volatility coming down.
Ah, right. It used to be famously volatile.
Extremely. He points out it used to be 3 times as volatile as the S&P 500 stock index. Now, he says, it's less than 2 times. Still volatile, but less so.
So the idea is that less wild swings make it more attractive. Sign of maturity.
That's the argument, yeah. He connects this lower volatility to more involvement from, say, pension funds and the companies issuing Bitcoin ETFs. He sees these as signs the market is growing up.
Okay.
And his core idea seems to be, as more of this serious money, Wall Street money, comes in, and as more people just hold Bitcoin long-term instead of trading it constantly, that will push volatility down even further.
Interesting. So more big investors means higher prices and more stability. Seems a little counterintuitive sometimes, but I see the logic about long-term holders reducing supply swings.
Right. Less available for quick selling, potentially.
So the million-dollar question, or I guess the $250,000 question, is it realistic?
Yeah.
End of 2025.
Look, it's definitely ambitious. Melker lays out his case based on these trends. But the crypto market is, well, famously unpredictable, isn't it?
Understatement of the year, maybe.
Huh, could be. So many things could happen. Big economic shifts, some new tech development we don't even foresee yet, or just, market sentiment changing on a dime.
Yeah. And could lower volatility also just mean it's stuck in a range before a move down?
That's also possible. Lower volatility isn't always a bullish sign on its own. So it's a fascinating prediction, but definitely one to take with a healthy dose of caution.
Absolutely. Okay, let's move to our third topic. This situation with World Liberty Financial, or WLFI. There's some congressional scrutiny.
That's right. WLFI, it's a crypto platform, and it has connections to the Donald Trump family. Because of those connections, some U.S. lawmakers are saying, hey, we need to look into this. They're worried about potential conflicts of interest.
Okay, so the link to a major political figure is triggering the scrutiny? That seems somewhat predictable in Washington.
It's often the case, yeah. Especially with something new like crypto mixing with established political figures. Regulators tend to get interested in potential conflicts or undue influence.
And how is WLFI responding? Are they cooperating?
Well, one of the co-founders, Zach Witkoff, responded through his lawyers. They sent a letter around May 15th, basically pushing back pretty hard.
Pushing back how?
They argued that the whole basis for the investigation is wrong based on, quote, fundamentally flawed premises and inaccuracies.
Strong words. Did they address these specific conflict of interest concerns?
Not really, not in detail in the way the article frames it. The letter apparently focused more on saying WLFI is busy building their platform, the implication being this investigation is just a distraction.
Yeah.
But they did add something interesting. They said WLFI isn't actually against oversight in general.
Oh, so they're not anti-regulation across the board.
That's what they claim. The letter stated they oppose, and again I'm paraphrasing the article's description, misuses of regulatory authority and uncertainty to suppress lawful innovation.
Okay, so positioning themselves as defenders of crypto innovation against unfair scrutiny.
That seems to be the angle, yes. Defending not just themselves, but the broader industry, potentially.
And the article mentions Senator Blumenthal specifically. What's his role?
Right. Senator Richard Blumenthal, he is a senior Democrat involved in Senate investigations. He's one of the main figures calling for this probe. The article suggests his concerns relate to the Trump family ties, but also mentions the Trump meme coin and a dinner event planned for people holding lots of tokens.
So a few different elements raising flags for him.
Seems so. It all circles back to that potential for conflicts of interest when you have political figures involved with financial ventures like this.
And there was a mention of the Genius Act. How does that fit in?
Yeah, the Genius Act. That's a proposed law about stablecoins, those cryptos pegged to things like the dollar. The article sort of uses it as an example. It suggests that how Congress handles this WLFI situation, these specific conflict concerns, might give us clues about their general approach to regulating crypto, especially where it bumps up against politics and ethics.
Ah, okay. So it could be a sort of test case, showing how they'll balance encouraging crypto development with managing potential conflicts.
Potentially, yeah. It might indicate how they're thinking about that balance between letting innovation happen and making sure there are guardrails, especially around influential people.
It's a really tricky balance, isn't it? How do you regulate effectively without stifling something new and potentially valuable, especially when politics gets involved?
Absolutely. That's kind of the core challenge regulators are grappling with across the board in crypto.
Okay, well, let's try and tie this all together. We've covered quite a bit.
We have.
We started with Moody's downgrading the U.S. credit rating, worries about debt and deficits driving that.
Then Scott Melker's bullish $250,000 Bitcoin call by end of 2025, based on institutions and lower volatility.
And finally, this pushback from World Liberty Financial against lawmakers looking into potential conflicts of interest due to Trump family ties.
Yeah, three seemingly different stories, but maybe not entirely disconnected.
How so? Do you see a link?
Well, you've got the bedrock of the traditional financial system, the U.S. government's creditworthiness, maybe showing some cracks. Then you have this burgeoning alternative digital asset class, Bitcoin, with predictions of explosive growth, partly fueled by mainstream adoption.
Right.
And then you have the regulatory and political layer trying to figure out how to deal with this new crypto world, especially when it intersects with powerful figures. They're all part of the same evolving picture, really.
That's a great way to put it. So maybe a final thought for everyone listening. As you watch these things unfold, maybe consider this.
Yeah.
How might those big picture economic factors, like the U.S. debt situation we talked about first, ultimately impact the crypto market's growth and how it gets regulated?
Yeah. How does the macro environment affect crypto adoption, price, and the rules Congress puts in place?
And what does that mix mean for where finance and technology are heading overall? Lots to think about.
Definitely.
Hopefully this deep dive gave you some useful perspective on these key developments. Thanks for tuning in.